How would you like to be able to own a bank? Have you ever considered the idea, but thought to yourself, that would be too expensive, and that you could never dream of affording such a large capital-focused investment in owning a business? Well, today would have been your lucky day because apparently HSBC just purchased a bank for just over $1. Yep, that's right, $1. CNN is reporting that HSBC buys SVB's UK business, ending the nightmare for British tech. And they scooped up the UK arm of Silicon Valley Bank, securing the deposits of thousands of British tech firms that hold money to that lender. That's crazy. It is important to note that had a buyer not been found, the bank would have been placed in insolvency by the Bank of England following the stunning collapse of its parent in the United States. And that insolvency would have left customers with only deposits worth up to 85,000 pounds, which is 100,000 US dollars, or 170,000 pounds of 200,000 US dollars for basically joint accounts guaranteed. And in a statement, the central bank said that they can confirm that all depositors' money with SVB UK is safe and secure as a result of this transaction. So that's good news, right? But more importantly, here in the good old US of A, what is good old Joe Biden doing? So why is Mr. Biden in such a rush to get to California now when there appeared to be no real sense of urgency rush to Ohio after the people of East Palestine faced grave danger from the Norfolk Southern train derailment that escalated very quickly to an environmental protection hazard, risking the lives of local citizens, air quality, farmland, streams, wildlife, and pets and animals? Well, apparently this is how capitalism works. According to a recent teleprompter reading by the commander-in-chief, after bashing the previous administration before announcing the federal government's actions and their role in bailing out big banks too big to fail. Failures? Yep. Because in just a matter of days, Silvergate, Silicon Valley Bank, or SVB, SVIB, and now Signature Bank, New York, big tech is big problems, but no worries, Big Brother will be there to cover all the bets for you. Does this give crypto a black eye? Does the opinions of decentralized investors and how they manage their XRP, Ripple, BTC, Bitcoin, ETH, Ethereum, USDC, altcoins, or tokens? Is Coinbase at risk? Can we trust the exchange knowing they don't have the support of the Federal Reserve, the FDIC, and US Treasury to bail out depositors like in the case of SVB and now Signature Bank, New York? Well, I don't know the answers to all those questions, but I can say that I made sure to protect my assets and store my keys offline and cold. Check out the Ledger Nano X cold storage cryptocurrency wallet. I will put a link in the description for you to look up and see how simple and easy it is to add the much needed protection that has become all too real and need for here in just a short amount of time. I would imagine that in the coming days and weeks, it will be imperative to be well diversified, securing all assets and properly monitoring and maintaining your cash flow. Welcome back to my channel. My name is G.I. Justin, and I have lots to talk about today with some very important topics. Please enjoy the content that I've prepared, the research I have done, and information I have to bring to you in the hopes of helping you gain access to the important facts and focusing on what matters most, the truth, as you all work to become better prepared and maximize your chances of survival. So thank you all very much, and please hit the like button and subscribe to the channel. All right, so the unexpected shutdowns of Silicon Valley Bank and Signature Bank have prompted new questions about the level of protection for bank deposits that many consumers have not asked since the 2008 financial crisis. And the good news for depositors at those banks is they will have full access to their funds on Monday after the federal government moved to unwind the institutions and fully protect depositors, according to multiple reports released on Sunday, as well as Mr. Biden's speech from earlier this morning. And while depositors at those banks have up to $250,000 in protection per account ownership category, thanks to the coverage of the Federal Deposit Insurance Corporation, or FDIC, they will all be made whole utilizing a specific use of fees paid in by the banks to manipulate the money and cover depositors above the $250,000 FDIC insured limits and thresholds. But if we were to see more banking systems collapse, as there is a complete list of 10 banks that are now likely next and possibly preparing for bank runs before the FDIC steps in to shut them down and delist off the stock exchange, the overwhelming question is, are your bank deposits FDIC insured? And what would we all know in the wake of the Silicon Valley Bank, Signature Bank closures? As CNBC reports, customers at Silicon Valley Bank and Signature Bank are expected to have access to their funds Monday after the federal government took over the two institutions? And if your own bank failed, could you expect the same? Or better yet, is there a way to check whether your deposits are insured? The short answer is there's good news, because most consumers have FDIC coverage. So you see, the FDIC was created in 1933 following thousands of bank failures, and since then, coverage began in 1934, assuring that no depositor would see loss from insured funds due to bank failure. The independent government agency is funded by premiums paid by banks and savings associations. And the limit for FDIC coverage is $250,000 per depositor per bank in each account ownership category. So Ted Jenkins, a certified financial planner and CEO of Oxygen Financial, a financial advisory and wealth management firm based in Atlanta and a member of CNBC's Financial Advisory Council, said the majority of Americans are going to be covered by FDIC insurance because most Americans have less than $250,000 in a specific account. Me too. The amount of insurance is based on legal ownership name, according to Jude Boudreau, a CFP and senior financial planner at the Planning Center in New Orleans, who is also a member of CNBC's Financial Advisor Council. For example, a married couple with a business may have up to $250,000 insured in an account in one spouse's name, and up to $250,000 assured in an account in the other spouse's name, and up to $250,000 in the business account. And if you want to know whether your deposits are FDIC insured, Jenkins said, just check your statement, adding that if you're going to a bank and you're putting your cash anywhere, that is the first question you're going to want to ask is the money I'm depositing now insured by the FDIC? Now, you may want to also check the FDIC's electronic deposit insurance estimator to see whether your funds are insured at your institution and whether any portion exceeds coverage limits. And one way to boost your FDIC coverage is to open accounts at other banks, particularly if you have more than $250,000 in deposits. Meanwhile, if you want additional coverage, you may also want to talk to your bank, as Boudreau suggested, and in some cases, that may work with other FDIC-insured institutions to have larger cash deposits protected and insured. It is also worth noting that there are other financial safety nets that can offer protection. These include, but are not limited to, Treasury bills, which also may be a strong option right now, as short-term bills currently have good yield and are backed by the full faith and credit of the U.S. government. And Boudreau said, they're as good as it gets when it comes from a safety standpoint. But as always, do your homework and make sure that you are well educated, informed, and comfortable with all of your investment choices. Never rely solely on what someone else is doing, says, or tells you to do, and make sure to pay attention, because this is very, very important. Because not all accounts provide FDIC coverage, according to Jenkins, and for example, a brokerage account opened with a financial advisor will likely be covered by the Securities Investor Protection Corporation, or SIPC, and while under FDIC coverage, you will be refunded dollar for dollar if your bank fails, plus any interest earned up to the date of the default. The SPIC is a protection failsafe in case something happens to your brokerage firm, so you're covered for up to $500,000 with a $250,000 limit for cash. However, protection under SIPC is limited and does not notably provide protection if your securities decline in value, so make sure that you're keeping that in mind. I hope this information has been helpful and is useful to you. Coming up next, we will discuss how to prepare for a decentralized currency exchange, as all these people are considering moving away from the dollar and using a different form of exchange and bartering before the Fed and central banks roll out the new CBDC, central bank digital currency, and gold. Yes, hard assets and precious materials are a huge focus of not only central banks around the world buying up this valuable asset to back their digital dollars, but also Kitco reported that gold price surged above $1,900 as the U.S. is grappling with this bank turmoil. Biden seeks to reassure the public. So you're not going to want to miss that. Please give the video a like, and thank you for your continued support. And please subscribe to my channel and share my channel on Facebook and with your friends and family. Thank you all so much. Bye.